Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, April 28th. Hope you guys are having a great morning so far today. We got a couple items here on the economic calendar, so just jump right into it. We'll start off with the Case-Shiller Home Price Index for the month of February. So back in January, it was at 3.9% appreciation year over year, and then it jumped up to 4.2 in February. So this was actually a good start before the coronavirus. So it'll be interesting to see what kind of I'm assuming we're going to expect a drop in March, so it'll be in probably April, but it'll be interesting to see what we come up, what kind of numbers we see. But it was starting to look really good here for real estate. Then, last but not least, we also got the consumer confidence, which obviously dropped quite a bit. So the previous report back in March was at 118.8. Forecast is calling for 90, and it dipped a little bit below that down to 86.9. So obviously, people are starting to feel the effects of the coronavirus, the quarantines and everything else. So of course, they're kind of worried about where things are going. So, and rightfully so, especially when there was a lot of uncertainty. People did not see any light at the end of the tunnel. We're just starting to see that now. So. At some point, we'll hopefully see those numbers pop back up and try to get back to some type of normalcy here very soon. Let's see how this is playing out in in the headline news. Stocks are up. We have, again, kind of like yesterday, optimism of more states talking about planning to reopen their economies at some point. So a lot of these states aren't fully. They're letting restaurants kind of open, but probably with restrictions. They're trying to get things kind of moving along, get some type of normalcy out there. But again, we'll have to wait and see as to how this translates, because there's a lot of polls that have been out there where a lot of people are half the people are kind of still reluctant about going out there uh, because they feel it's too soon, and you got the other half that want to go out there and get some type of routines again. Investors are watching oil. It kind of dipped a little bit again. It's down to about $12 a barrel right now, and that's of course something that is a concern because there's so much glut in the markets right now that we can't get rid of it. But if we can reopen these economies and with that cheaper oil, that could help really spike things up going here. People uh, will help to stabilize things a little bit quicker. And then we got earnings reports coming out as well. We'll have most of the big ones. We got the S&P's been kind of the balance of these major tech companies, and they kind of take any swings in their stocks will swing the index as a whole. And we got people like Microsoft, we got Amazon, we got Facebook, and we got a lot of these, like I said, Alphabet, a lot of them giving out their earnings reports, and a lot of them will be doing after hours, so we won't really see the stock market reactions until the next day. So, and also I forgot to put up here is the Fed will be start their 2-day meeting. The FOMC will be beginning their meeting today, and then tomorrow we'll have an announcement. There's no expectations on obviously changes in rates. But they will be listening to what they say. If they're going to still talk about any of their purchases for the junk bonds and bond purchases, stuff like that, we're going to be listening for. So stay tuned to any comments that the Fed may make about those tomorrow. So let's jump ahead, see how the bond market is doing. Speaking of such, we're up about 11 basis points. So, excuse me, as you can see, that we got the 25-day moving average up here, but we're getting to a point where it's going to get probably pushed upwards. Most likely, it's going to hopefully get pushed upwards. If not, you might want to look into locking if it doesn't stay above this 25-day moving average. Um, as we get squeezed, at some point it's going to get squeezed here up on the ceiling here. You don't have to make a decision going up or down. And where the market's been looking lately, probably be upwards. With the way the markets are. So, but we'll have to kind of wait and see what transpires. But again, with the economy is and everything, bonds typically obviously thrive when it turns into negative news for the economy. So we'll have to kind of wait and see. Yields are down. They're down to about 0.61% right now. And so, anyways, get back to what we were talking about before with the mortgage rates. Mortgage rates should see a little bit of improvement today in our pricing today. So my apologies, I did not specify that. So the mortgage-backed securities up, and yesterday's kind of close. The negative was to close not as far down. That kind of helps and gives us a better pricing scenario for today. All right, so that's what the wrap. If you guys are in California looking to buy or refinance, please feel free to reach out. I'd love to be able to talk to you guys about your scenario. You can direct message me or email me. Also in the description, if you guys are just ready to go, you guys are welcome to click on the link. I will put a link in there. You can put your information in. We can touch base and go over what you guys are looking to do and go from there. All right, you folks have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye bye.